Good morning and welcome to this month's OakCrest Insight, everyone. So what are we going to talk about today? Well, today I want to first start by highlighting a few key points that happened in our economy in the first quarter of the year. Then the last part, I want to discuss some items to think about as you hopefully just filed your taxes for 2023. So let's jump in and start. The first quarter in the markets really was a continuation of 2023 returns, mostly positive. Here's a chart showing you how this looked as you view January through the end of March. As you see overall here, right, the market the first quarter was up about 10%, really kind of after stumbling the first few weeks of January. Stocks now, as you zoom out and see this chart, have more than made up for their losses now where the downturn happened in 2022. The S&P in January posted its first record high in 2 years. NASDAQ or tech stocks hit a record high since the first time in 2021. So think about this for a second. What's the average sentiment that you hear when you watch the media or talk to friends, colleagues about our economy? Is it mostly positive? Probably not, right? As every day we hear from clients that they're frustrated on inflation in the economy, our politics, right? But despite this frustration, the markets last year had an amazing year and started off strong again. We just had our quarterly internal investment meeting. The general outlook here on our team continues to be cautiously optimistic as we head here into the second quarter. Tech stocks continue to drive market gains. But despite all the positive stock market stuff, bonds fell slightly here in the first quarter. The Fed kept interest rates steady, and bond futures, or the markets that are expecting this, now as you see from this chart, think that maybe there's about a 50% chance in July that rates might start cutting, but maybe after that is probably when they're going to. So earlier this year, the market was expecting a lot more rate cuts, and now they've backed these expectations down. Oil prices rose amid geopolitical uncertainties, which is kind of putting pressure on inflation. And inflation currently is at 3.48%. Now, we're going to continue to update you more in depth as you listen to our quarterly webinars and these monthly videos, as our economy always is changing. Lastly now, I want to talk taxes briefly. Hopefully all, or at least most of you, probably just finished filing your taxes for 23. And you either got a refund you owed, right? But as many of you know, we now do hundreds of tax preparations for clients. And the general takeaway as we looked at all these returns of our team was that a majority of American incomes, when you compare them to 2022, were much higher. And this is from an increase in their Social Security income, increase in their pension incomes, and an increase in the required distributions from their IRAs. The other thing that added to that income is generally Americans earned more interest in the bank or after-tax investment accounts as rates have gone up. So this is all positive as you see people's incomes much higher, and their standard deduction now for joint filers is $29,200 here for 2024. Now, the takeaway I tell everybody and tell clients is that taxes is not just a March or April item to look at when you file. You should look at them throughout the year so there's no surprises. If you owed, figure out why. Make some changes on your withholdings. If your income is changing this year, you're retiring, it's going up, you're changing jobs, you're selling a property, or another major financial event is happening this year that will affect your income, talk with your accountant throughout the year. This is what they're there for, and not just to meet one time a year to input all of that data to file your taxes, because at that point you can't do any changes. On our next quarterly webinar here on Thursday, April 25th, we'll dive into more of the economy and taxes. And we look forward to seeing you next month on OakCrest Insight.